September 2022 proved historic for the country, for politics and for the housing market. September 2022 was a month unlike any other. The end of the second Elizabethan age, Liz Truss, the Queen's final Prime Minister, and the first Prime Minister for the King Charles III. The late Queen's first Prime Minister, Harold Wilson, once quibbled a week is a long time in politics, and Friday the 23rd to Friday the 30th September proved just that. Further to the announcement of much needed financial support to their households and businesses to tackle the energy crisis, the government's mini-budget provoked a shockwave throughout the UK and the global economy. Signalling a significant shift in economic policy, the tax-cutting budget provided a rebuck from the International Monetary Fund, intervention by the Bank of England, and uncertainty across the markets. Sterling fell to historic lows against global currencies, whilst mortgage lenders were forced to withdraw an unprecedented number of products due to the 150 base point rise in the cost of borrowing that ensued. Despite concerns over the rising cost of living, August 2022 proved the strongest for sales since 2007, according to the HMRC, and the Bank of England reported a sharp increase in mortgage approvals. 74,000 mortgages were approved in August. That's the highest level since January 2022 and up 11% on the pre-pandemic 2015 to 2019 average. With the price growth of newly listed properties tracking back to longer-term seasonal norms in recent months, according to Rightmove, and the volume of new supply to the market increasing, there were signs that market dynamics were beginning to shift back to more of a balance. The recent economic shock to the market has undoubtedly caused an emergency brake to be applied, with lenders and movers alike awaiting for clarity. As with the mass market, prime market prices in September continue to show price growth versus a year ago. In higher volume market areas such as London, the current economical context provides a window of opportunity. Purchasing in many currencies currently making significant savings compared to the start of the year. The latest for October shows the average price of property coming to the market is up by 0.9%, says Rightmove, but first-time buyer demands have dropped. So asking prices for houses in the UK edged higher in October, although demand from first-time buyers has dropped as mortgage rates surge. Despite the economical turmoil since the government's mini-budget last month, there has been little immediate sign of the housing market slipping, according again to Rightmove. The property website said that the average price of property coming to market this month was up by 0.9% to a new record of £371,158. That's slightly below the average increase for this time of year. However, Rightmove has warned that the effects of wider economical uncertainty could take time to filter through, with some buyers rushing to complete on their purchases and on the back of the existing mortgage offers that they currently have. Others have predicted that the market will soon decline, with Halifax reporting a marginal decrease in sold prices in September, and the surveyor's RICS tipping the end of the 13-year UK housing boom next year. First-time buyer demand was 21% lower in the last 2 weeks compared with 2021, but still significantly higher than in 2019. Rightmove said, however, it said some new movers had paused their plans in the face of uncertainty and price rates. It said the vast majority of agreed sales were going ahead, with some buyers accelerating the process to ensure they could proceed with lower fixed rate mortgage offers before they expired. Prices were reduced on 23% of homes on sale compared with 21% last month. Rightmove said asking prices were likely to drop in November and December in line with normal seasonal price changes, and that there was more economical events to play out before forecasting the market in 2023. Tim Bannister, Rightmove's director, said, "What's going to happen to house prices is understandably on the minds of many home movers right now, especially after the market uncertainty after the government's mini budget. There's been no immediate effect on prices, but the trend of a slight softening in the pace of growth continues." He went on to say it would take time for the market to settle into a more normal level of activity after 2 years of market frenzy, adding, "Some aspiring first-time buyers will have had their plans dashed by the sudden nature of mortgage rates rising, and now face a difficult situation with rents also rising and a shortage of available homes to rent." Stay tuned to my social channels at Fine and Country Alan to make sure you know what's happening with the property market right now.